The thing is, if you're trying to get a massive low doc business loan, you need to have a specific approach here. And so for the last 35 years, we have actually developed an approach that I want to share with you in today's conversation that will help you actually get a massive low doc business loan. And we're talking about a power play of $1 million. Okay. So here's an overview I want you to really think about. So when we talk about a low doc or a no doc business loan in general, you need to understand that those are loans that really don't actually require that you provide that you gave massive paperwork. Like they're not going to ask you to provide business licenses, your financials, all that kind of stuff, or ask you to have a business plan, to have your bank statements, all that kind of stuff. They might ask you just one or two pieces of paperwork. And most importantly, a lot of lenders want to pay attention to your liquidity, to your cash flows. Cash inflows and cash outflows. That's why they might ask for your bank statements, only your bank statements, or they might ask you to provide your P&L, so your company's P&L, your profit and loss statement. What we have seen in the last few years is that a lot of fintechs like Bluevine or OnDeck or Fundbox, they will ask you to connect their system to your company's bank account or to your company's accounting software. So they want to really take a look at your QuickBooks, your Xero, your Wave. They want to have your Gusto for that matter. They really want to have a direct understanding of your operations. So all they care about is the cash. They don't care about they do care about the industry you're in, the economic sector, what's really happening in your industry, blah, 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 blah. But they really, really just want to follow the money. It's really important to have that in mind. If you're trying to have a low doc business loan, think about the money aspect of things. By the way, boss, welcome back to the show. It's really a pleasure to have you here to have a quick convo with you about how to get a low doc business loan. We're speaking about a power play of $500,000 to $1 million. And when we talk about low doc business loans, we're speaking about loans that really can approve you real fast. The only problem, quote unquote problem, is that they do tend to charge you a high APR. So basically, you're not going to get a low doc business loan at a traditional bank or a credit union. You are better off actually asking a fintech lender, an online lender, or an alternative lender. Let me help you decide here. So if you're trying to get a low doc business loan, the decision process is really important. Why? Because low doc business loans are different depending upon the repayment window, depending upon the lender, depending upon how you structure the loan itself, okay? Because when we talk about business loans, you have several ways of structuring the loans. Some lenders will take care of you, that they will actually customize a loan for you if you have a relationship with them, or you, let's say, depending upon what you are trying to finance with the loan, okay? And so when they ask you the use of loan proceeds, this is this is pivotal. You have to explain exactly what you need the cash for, so the lender can see if you happen not to be if you don't fit the traditional eligibility requirements, they can actually do something customizable for you so that you can qualify. So when we talk about low doc business loans, remember that you have several types. Okay, you don't have only one type of low doc business loans. No, you have several types. But in today's conversation, I want to focus on four of them. So first, think about your short-term business loan. So this is basically your regular business loan, nothing complicated. It's the loan that you and I know about. You get the cash, you have to pay it over, let's say, 1 year, 2 years, 3 years, 5 years, 4 years, anything in between. It doesn't really matter. So, but this is straightforward. And in some cases, the lender might actually reduce the repayment window if they think that the risk is too high. So instead of asking you to repay the loan over, let's say, 5 years, they'll probably approve you for 1 year or 2 years. We've seen this a lot. Fundbox does it. OnDeck does it. So they're not going to allow you to repay the loan over 2, 3, 4 years. No, they want to do 18 months. They want to do half a year. So it's really one way for those lenders to cover their asses, so to speak, to really mitigate risks. Okay, so this is important. So short-term business loans are one type of low doc business loans to think about. By the way, boss, I want to quickly remind you of today's topic. We're having a conversation about how to get a low doc business loan with massive approval ASAP. The second type of low doc business loans you want to think about is merchant cash advances. So those are other types of business loans that you might qualify for. And what we love about MCA is that you get qualified real fast. But the only thing is you need to have electronic sales. So when we also talk about low doc business loans, remember that you can also apply for a business line of credit. So in those cases, we speak about a low doc business line of credit, and this is actually important because you are able to be flexible. You are able to get a business line of credit, or like you can get business funding in a very I think in a very structured way, and you can get the cash ASAP as well. And the cool thing is that for business loans, the requirements sometimes are even lower than business loans for business line of credit. So business lines of credit, the requirements are even lower than business loans. Why? Because the lender knows that you're not getting all the cash at the same time. You probably, like, if they approve you for $1 million, you probably can tap into that line and maybe borrow 50 grand or 24 grand, 25 grand from that $1 million, right? So the risk here for default is kind of low because you don't have access to all the amounts at once. So lenders will be monitoring your account, but they will tend to give you like a better rates and better, like, less stringent terms. Okay, so this is so I'm just explaining to you that you have a lot of options. When we talk about low doc business loans, we're speaking about also low doc business lines of credit. You also you can think about invoice financing. Also, invoice financing or invoice like accounts receivable financing is another way for you to actually get a low doc or no doc business loans, so that you can actually access funds immediately without actually having to provide all kinds of documentation. Because the cool thing is when we talk about invoice financing in general, remember that this is like some type of revenue based financing. So the loan decision is made upon the propriety, if you will, the worth of the underlying assets. And here the assets is accounts receivable. In other words, your client, the customer receivable is the assets. So the lender will actually pay attention to the like the credit story, like the reputation of the customer and everything that revolves around the customer, to make sure that this is a legit, quote unquote legit customer that they can actually invest in. So you think about invoice financing also as a type of low doc business loan. The thing is, if you're trying to get a low doc business loan, let me talk about a review that I really want you to pay attention to. Remember that it's not a loan that is common, right? You have different types of business loans, and it's really clear that you need to have a clear understanding of the pros and cons of low doc business loans before getting yourself into that. Because the bottom line is you're going to be saturated, quote unquote saturated, with a high interest rate for several months or years. It's very important, therefore, to understand exactly what you're getting yourself into. So I want to quickly talk about the pros and cons of low doc business loans. So what are the pros here? Well, when we talk about low doc business loans, generally what we have seen in our research is that you do have access to faster processing times. So they probably could actually approve you within 12 to 24 hours. I'm talking about you applying and you being approved and having the funds deposited into your account within 24 hours. Think about it. You apply, they review it, and they approve you within 24 hours. That's just fantastic. Okay. Now, because the low doc loans that require minimal paperwork and documentation, they can be often processed and approved much quicker than traditional loans. And another thing that we love about low doc business loans is that you have more accessible qualification requirements, because usually, those loans are based on a business's assets instead of the income history. So borrowers with low credit scores or other weaknesses in their financial profile may get approved more easily. And this is something we've seen time and again. And you also have shorter repayment windows. So basically, low doc business loans are usually, they usually come with shorter repayment terms. And so those repayment terms are kind of cool for certain entrepreneurs, for some business owners, because then you reduce the risk of indebtedness over the long run. Okay, so it means what? It means a business owner can pay off the loan sooner and pay less in interest. You also have more flexible terms. So with low doc business loans, as a business, you can access a larger amount of capital without providing extensive paperwork or collateral. And this is kind of cool because it makes it a lot easier for entrepreneurs to access funding whenever needed. So that's really cool. So now let's talk about the cons here. So what are the cons of low doc business loans? So when we talk about low doc business loans, we're speaking about a type of loan that gives you funding that gives you access to funding ASAP, right, or faster. But you do have to account for higher interest rates. So those loans tend to actually charge you more in terms of APR. That's why you can't get those loans anyway with the regular banks and credit unions. You might have to resort to online lenders and alternative lenders. So think about, you want to account for higher interest rates. You're going to have to have a shorter repayment window. Okay, so low doc business loans typically have shorter repayment terms than traditional loans. This means what? It means that as a business, as an entrepreneur, you may have to pay off your loan quickly, and you have to pay more in total interest in addition to fees if you are not able to do so. Okay, so when we talk about shorter repayment window, this could be actually a pro and a con. It can be a con because it can be disruptive to your balance sheet, to your cash inflows and cash outflows. Okay, and another disadvantage that we don't like, that we have seen with low doc business loans, is that you have fewer options. So because obviously you are limiting, as a borrower, you are limiting your ability to shop around for the best deals, because those loans are not even available at credit unions and banks in most cases. And another thing I want you to pay attention to also is that when you are actually applying for a low doc business loans, you might have limited access to capital, because the thing is that these types of financing usually don't give businesses access to large amounts of capital, which could be limiting for a business owner, especially if you need more funding. So the bottom line is what? You get access to cash real fast. Yes, that's true, but you're not getting a $1, $2, $3 million. You're getting something limited, and you probably have a shorter repayment window. But the thing is, they're not checking your credit in some cases. They could approve you based on your company's revenue, based on your company's assets, not on your personal credit score. So there is a trade-off that you need to think about, and so this is a trade-off I want you to think about. So this is what it is. Let me give you a bonus here. So the big question is, should you get a low doc business loan at all? I mean, is this the right option for you at this particular time? Well, this is a great question. And to kind of help you answer, I mean, obviously I can't answer this question for you because you know exactly what's happening. You are in the kitchen, as my old folks used to say. You are in the kitchen, so you know how great the food is, or how, if we have food at all. So what I'm trying to say here is that you actually you should only think about getting a low doc business loans, or no doc business loan for that matter, if you don't have a credit score, or your business history is not sufficient enough to qualify you for traditional forms of financing. Because the thing here is that when you actually go for a traditional form of financing, you actually get a better rate, a better APR, you get better terms and conditions, all that kind of stuff. So you only want to think about a low doc or a no doc business loan if you know that your credit is a little sketchy, or your business profile is not really that great. So you're looking for alternative forms of financing. Okay. By the way, boss, I want to quickly remind you of today's topic. We're having a conversation about how to get a low doc business loan, how to really get something massive. And it's important to have the right strategy if you want to qualify. And so when we talk about low doc business loan, remember, you want to get this type of loan if you need quick access to capital and you can't wait for a traditional business loan. You have low credit scores or other weaknesses in your financial profile. Let's say, for example, you have a credit score of 400, and that's your personal credit score, a FICO score, or you have a Paydex score of 60 or 65, or you have you have Experian IntelliScore Plus of 75 or 70. Okay, so if you have those sort of low credit scores, you might want to think about getting a low doc business loan. And if you, let's say, if you also don't qualify for traditional financing due to, let's say, inadequate credit or business history, like banks don't want to evaluate your application. Banks and credit unions, they don't want to talk to you. Then you might want to resort to those type of financing. And if you can also think about this low doc business loan if you have short-term cash needs such as equipment purchases or investments in marketing campaigns, okay, or you don't need a long repayment period and your business has sufficient cash to cover monthly payments. Now, let me give you a winner here. So basically, I've been talking to you about how to get a low doc business loan. But the thing is, there are alternatives to low doc business loans, actually. And it's always important to have a backup plan in life, right? I mean, you think you have the right strategy and everything, but hey, listen, it's always have to have plan A and plan B. So that if plan A doesn't pan out, you have the ability to actually fall back on plan B. So if you are looking for a low doc business loan and you can't get it, just remember that you can also try to apply for easy business loans. There are business loans that are very easy. I mean, we're speaking about business loans that do not require any kind of paperwork. So you also think about traditional business loans. So you might have to go back to your bank. I mean, I know you probably don't want to go to them, but you might have to go back to them and just apply for a regular business loan at your bank or a credit union for that matter. And of course, the process there is longer. The process is slower. They might give you a lower loan amount. But it's more legit, and the APR will be more decent than what you'll be getting if you were applying for a low doc business loan, right? So those are things I want you to think about. And you can also try to apply for an SBA loan. Obviously, SBA loans are government-backed loans that you can use to purchase the equipment, expand operations, and cover other short-term operating costs. Now, the only thing is those loans require they do have stringent application requirements because obviously the government is backing up those loans. So they might not be as easy to qualify for as other business funding types. And I also want you to think about things like credit cards, business credit cards. You can think about equipment financing or leasing, right? You can think about maybe what we call the SBICs, the small business investment companies, or you can think about even crowdfunding. Why not? Yeah. All decks are on the table. It's all about just making sure you get the loan that you need. And the bottom line here is, if you want to get a low doc business loan, you need to explore all forms of business loans. That's the bottom line, because at the end of the day, it's all about financing. It's all about getting the cash to sort of take care of business, to literally take care of business. So it's all about just getting the fund. So if you have the right strategy and you apply it consistently and methodically, chances are you are going to get the low doc business loan you want and need. Thank you so much for your attention. I really appreciate it. Let's quickly have a recap here. So I was talking to you about how to get a low doc business loan ASAP here. And I spoke to you. I gave you the overview, the decision, the review, the bonus, and the winner. Thank you. God bless you. I'll speak to you another time. But until then, remember, stay marvelous.